Hey, how's it going, everybody? Everyone's starting to log on here. Awesome. Alex, how are you? Alvin, good to see you there, Alvin.
Hi, Logan.
Hey, Brandon. Jay, thanks for jumping on, Jay. Good to see you. I love it. Everyone's starting to log in right now. Hope everyone's having an amazing week as you're all starting to tap in here. Beautiful. We'll give everybody a few minutes to jump on here.
Make sure you put your questions in the chat box
Yeah.
if you have any, so we'll answer them at the end of the session.
Make sure everyone can hear us okay. Like I say, like Tania said, any questions as we go on, just go ahead and throw them in the chat box. We'll make sure that under the Q&A portion, we'll be able to answer all your questions. All right. Give everybody another minute or so before we get started. Super pumped here. It's going to be the Hummingbird Capital Properties Cleveland edition. So we'll be able to introduce you guys to the Cleveland market. We've got a lot of interesting information to tell you. It's going to be really exciting. A soft introduction, really. We're not going to get too high level today. We'll get into some numbers and some details, but just kind of introduce you guys to Ohio and Cleveland, exactly what it's all about. We'll give it another 2 minutes here before we get started. For those of you who know, again, Nate.
Tania.
Of course.
You don't see me very often, but I am around. I'm in the background. I'm always in the back scenes.
And you're branded today. Tania, you're branded nice. I like that.
Yeah.
On point.
Tea and chocolate time, right?
On point.
On point.
We're going to share the screen and we're going to get rolling. Like I said, any questions along the way, just go ahead and put it in the chat. Okay. There we go. Hope everybody can see the screen okay. Chat box up. If any questions at all, let us know. And we'll go ahead and get to them at the end. Okay, so here we go. Real estate investing in Cleveland, Ohio. We know that some of you are quite familiar with Cleveland, and some of you have been there, and you'll see some familiar spots there. All right, starting off, all about Cleveland.
Cleveland is a major city, and surprisingly, I was just there recently, and it's actually quite gorgeous. The greater Cleveland area is home to 3.6 million people. It's actually the 17th largest major city in America. The suburbs are phenomenal, and the population growth is expected to increase. The industry, Cleveland's unemployment is really consistent with our national average. However, they're having a massive increase in jobs in the market in the last year, and future job growth is predicted to be 21.4%, which is amazing. Cleveland's economy, it is the world's greatest medical center. There is like Cleveland clinics on every corner, and five Fortune 100 company headquarters. And to be honest, it is like the Cleveland clinics really, like, how do I say, they really just.
Yeah, they like growth. It's extraordinary. They got like over 100,000 employees in the medical field there.
Yeah, over 100,000, right? So it generates like $21 billion annually. But also to Amazon, which is amazing, is investing $7.8 billion in Central Ohio in the next 5 years. So like huge amount of money. And the Cargill salt mines, which is really interesting. Under Lake Erie is home to the second largest salt mine. Did you know that? Because I didn't tell like recently. These mines provide thousands and thousands of consistent jobs for the Cleveland market. So really awesome.
Yeah, so I think that's what we talk about market metrics, right? So kind of painting a picture for everybody on why Cleveland, why is Ohio a great place to invest. So start getting into more detail in a moment on some laws and things like that. But just knowing that the future stability of Cleveland and of the area with jobs and with transportation. So we'll get into some more detail on that.
And people can pay their rents. Like basically they can pay their rent.
Yeah, of course. These things. So you did mention that the second largest salt mine is Cargill in Cleveland. But does anybody know where the largest salt mine is? You do put in the chat. I'm curious to see. We'll answer that question now. So more jobs in Cleveland. You're going to recognize a lot of these logos, and a lot of these companies have major presence in the Cleveland area and in the state of Ohio. So, places like KeyBank, for example. KeyBank's on here. KeyBank has over $200 billion in assets. Their headquarters is in Cleveland. Progressive Insurance, another one. Progressive, their headquarters is also there, $50 billion. The medical industry, as Tania mentioned, the medical field there between Cleveland Clinic, Metro Health, and University Hospital, they employ hundreds of thousands of people. They also provide great tenants because we've got nurses, doctors, medical staff, and hospital workers, which we saw firsthand over the last few weeks, that are great tenants.
Almost like Hamilton, but better.
But easy for those who are from Hamilton. Better.
No, I'm talking about renters.
Yeah, for sure. Then, they've got some ordinary years. And as Tania mentioned, Amazon investing $7.8 billion. Just some logos you recognize here. Like economy and affordability on the screen here, you'll see here that Cleveland, Ohio, Cleveland essentially in Ohio ranked in the top 5 affordable cities in all of America. So you're talking about 330 million people. Top 5 cities of affordability. That's a great metric for us. And the cost of living is very, very, very low. Again, some of you who've been to Cleveland know and you've seen that firsthand. But again, on the index, it's like 94, the 100 nationally. It's great. So again, it's on the southern tip of Lake Erie. There are several things to do there, which attracts quite a few, really great, high-paying, tenants, doctors, and lawyers, and things like that.
Healthcare workers.
Yeah, tons of healthcare. So moving on here. Tourism and attractions. Again, some of the more popular things there that you've seen that you're aware of. The Rock and Roll Hall of Fame is there. The Pro Football Hall of Fame. One interesting thing that we found when we were there. Now, most of you know Tania and I and our lifestyle. We're not huge beer drinkers, but we do like some craft beer. And we did notice when we were there that there are craft breweries everywhere. Tom, who's on the call, will recognize that. We were there together. It's 366 breweries, 83,000 jobs, and $10 billion contributed in micro beer. Pretty wild. Pretty wild. So just some logos to represent here. Again, in America, sport is life. Jay, you know what I'm talking about on here. Massive. You're talking about NBA, NHL. You've got collegiate sports are huge, and down there, tenants. It's a community feel down there. You're talking high school events that attract 25,000 fans into the football stadiums.
Like the high school we saw was incredible.
Yeah,
the facilities are incredible.
Yeah, quite a place.
So beaches, again, Nate was saying that, we're on the shore of Lake Erie. And to me, when I went there, not only would I want to invest there, but I'd actually want to travel there, kind of like going to Saba Beach or Wasaga Beach or whatever it may be. It is actually so beautiful. So I feel like it's almost like this new attraction point for people to actually do short-term rentals or just want to go there and have like a second place. But awesome. Like I said, the green space is amazing. The beaches are amazing. So they have a lot of things to do in the community.
I see Mark, Nikhil, you guys jumping on right now. Good to see you guys. Thanks for jumping on some introduction. Good to see you guys. Listen, this is interesting. You got the beaches slide. I just looked and saw that I'm doing transport. What happened here?
I like beaches.
I got that's the exciting stuff. So again, a metric for us real estate is important things. Got to get around. Right? Tenants need to you need to make sure that you have it in big cities like this with almost 4 million people, a robust transport system. So in Cleveland, in the greater Cleveland area, they do have that. They've got, you can see here, one of the largest actually transit agencies in the state of Ohio and in the Northeast in America. The RTA here, they've got a massive ridership and it connects the entire city. Very easy for tenants to get from one end of the city to the other. Transport.
Do you remember seeing the transport right in the middle of this beautiful suburb? Like,
Suburbs that are loaded with multi-family buildings, and there's a ton of transit that gets transport. Yeah, A plus definitely. Mm-hmm. And then we get into again another metric for us investors that we look at is the state, is the city, is the at the federal level, are they investing money into that particular metropolis? Are they growing? Are they expanding? Are they gentrifying? The answer is yes for Cleveland. There's a lot of approved developments. There's a lot of invested dollars. We saw firsthand the 50,000 of course, city and how it's changing. Here's one of the development plans they have down there, 75 acres is being redeveloped. Hundreds of millions of dollars being dedicated to connecting areas of the city. And then again, the next one here is going to be $650 million. Again, another redevelopment plan in the downtown for converting the university, the Cleveland State University area, and the entire downtown, of course. So that metric is there as well. And there's investment going on throughout the entire greater Cleveland area. So meat and potatoes. Now you've just seen a little bit about Cleveland or why we like the city, some of the areas and the reasons for the attraction for tenants and higher quality tenants that are coming into the city. So now let's talk real estate. Let's talk the Cleveland market, and this is going to be where we talk about those things that are important to us investors, things that the questions we ask and compare to places that we're investing in other areas, or if you have not yet invested. Awesome. These are the things that you can learn to see. These are things that matter. These are things that we're looking at as landlords, whether it be a joint venture or individually. So we'll get into some of these very important details here. We promised, my Instagram page released some of this information already.
Well, that's my favorite slide.
Your favorite, your favorite slide? Yeah.
This slide is a landlord-friendly state. So unlike no other, there's no rent control. Okay, and move your thingy.
Sorry, I know. I'm trying to.
Oh.
So sorry about that. We'll go ahead. I'm getting that through. So if you guys do have questions, definitely see if we can fire through there. We'll have a look at it. Sorry to interrupt there.
Sorry.
Landlord friendly.
Right. No rent control in the state. So the landlords can raise the rent so long as there's proper tenant notification. So that means at the start of the lease and or at the renewal of the lease. And by far the best thing ever, if you've ever had tenants that you can't get out because of our Ontario laws, with evictions in Cleveland, Ohio. So we only need to provide 3 days notice of eviction of a non-rent payment or any other lease violation. The entire eviction can take only 3 to 5 weeks. So that to me is very important.
Hold on.
5 weeks, not 3 years.
So for what we're dealing with one of our properties right now, for example, you're telling me that we can get rid of a problematic tenant in 3 to 5 weeks in Ohio.
Yeah.
Yeah, of course. So that's one big thing, of course. We love that. I want to leave the slide up, but we're gonna balance it. So, all right. Market. Let's look at market rents and deal flow. So another big question that we have, it's a great question. First, before we start looking into this particular market, and when we go into other markets, it's okay. That's real great. These metrics are awesome. What about rents? Are they in the floor? Purchase prices are there. What about rents? Well, the reality is that market rents in Cleveland are actually quite relative when we're looking at purchase price, and they're a little bit higher than we would expect. So some of these average market ARV or after repair value rents are, for 1 bedroom, 2 bedroom, 3 bedroom, these are US dollars, and quite often we're coming in there and we're stabilizing a property and we're getting the rents up substantially. So from this, you can see here our strategy that we employ when we come in and buy a property is this. We want to buy underperforming properties. We want to renovate them to bring up the rents about 30 to 40%. So this is kind of how we force higher rents and increase property values. It's the same strategy used for some of our a little bit more experienced investors that are in the webinar, and then those who are kind of new to learning. This is what we like to do. We like to buy properties that are kind of like in B, C neighborhoods of properties. That's what we call them on the scale. Relatively speaking, A, B, C, D, you can imagine. And in Cleveland, it's important to recognize that a C in Cleveland might be different from a C in say, KW or Guelph or Hamilton or Brantford or Windsor. So we're looking at the B and C properties that are slightly distressed.
Sorry, can I interrupt? The B and C locations that we saw were
talk a little bit louder. I'm not sure how the volume is.
The B is not nearly as distressed, or the communities are not nearly as.
Yeah, kind of.
How can I say it politely?
Well,
run down. As run down. Right.
That's right. Another reason why there's so much research in there. Go in there and we can experience the neighborhood. So yeah, we do go in there, we'll go by slightly distressed underperforming properties. You know, our team is we're analyzing multiple properties daily to ensure that we can identify the investment properties that fit into this strategy, right? And you know, the goal is to come in there to buy a property that's slightly distressed, get it at a great price, turn over the units by performing these strategic renovations, and drive up rents and maximize the value. And then the goal on the other side of the exit strategy is to refinance the property, or if it's a flip, we'll get into those ideas as well. You know, be able to sell it for a maximum ROI. Sorry, huh?
Which you can do right away.
Yeah, absolutely. We'll get into that about different options that you have as well as investors. So deal flow in America, another thing that we love about America is that there are 330 million people there, right? So, I mean, the economy of scale is there. It's massive, obviously, and does provide, you know, Ohio specifically, we've looked at and, you know, invested over time in different areas, but the Ohio market's not saturated by comparison. You know, Florida, Arizona, Texas, South Carolina. A lot of Americans are flooding into those markets. They're great markets, but depending on what the strategy is as an investor, you know, the strategy that we're looking to employ here, you know, the competition and the price per dollar in those other states, you can't even compare them. And then lending and borrowing options. Again, for those investors here that have experience with lending and borrowing in Canada, even if it's just you know, your own primary residence, your options are kind of limited. But in America, the lending environment is heavily driven by capitalism. You know, they love to make money. They love a win-win scenario. They love to develop relationships. And there are over 5,500 lending institutions. You know, countless private lenders in America. So, you know, in fact, I wrote it down on here in big bullet. I want you to see that the lenders actually compete for the borrower's business, as opposed to in Canada that we, you know, you feel like a criminal when you're applying for a mortgage. You're just going to get any money. It's like, you know, the process is incredible.
I was going to say, I'm encouraging everyone to just take notes as well, please. Like, just make sure you take notes, whatever you need slide.
Yeah, absolutely. And we'll make sure we get a recording of everybody after as well, which I was going to mention. Lower purchase prices. Obviously. Okay, I'm sure I'm excited. Go ahead.
So in real estate investing, we often say you make your money on the buy, not the sale. So Cleveland is amazing for affordability, right? Our ability to negotiate and secure low real estate purchase price, and that allows us to really stack our strategy. So that means buy a property undervalued, like you were saying, force the appreciation by doing strategic, necessary only renovations, and then increase the rent. So we're taking advantage of real estate investing techniques that produce higher returns and allows us to recycle the capital in a much shorter time.
Yeah, more deals.
Yeah.
Right? In reality, yeah. Great point there with the purchase prices. All right, let's get into a few live examples for everybody on, again, economies of scale, and then we're going to look at everything. We've got live examples of smaller things in the multifamily space. You got, you know, single family, but then you got duplexes, triplexes, that kind of stuff. Also different strategies. So having a look at the screen here, is you're going to have an example of a live property on the market, and then we got off-market properties as well. This is going to be a case study for a BRRRR, and you know, for those of you who aren't familiar with the BRRRR strategy, we talked about the Hummingbird strategy. When we're going to come in, we're going to buy the property, we're going to renovate the property, and we're going to rent the property, then we're going to refinance the property, and we're going to repeat, right? Rinse and repeat, right? So that's the BRRRR strategy. This is what you're going to have to do retaining the property. So here's an example. Purchase price, US dollars. Everything on here is going to be in US dollars. It's $95,000. This is what property we, again, this is going to be, there are opportunities for us to negotiate on these prices. This is actually less. And then the renovation budget on this property being walked and looked at, so it's going to be $24,000. ARVs, again, the fair value is something that as an advanced investor, we take care of it in advance. We look at the comps in the area, the CMAs, we're going to see exactly where the value is going to be of that property that we're buying in that community when we're done renovating it. So it's not a guess. It's something that we're aware of. And then, so we're looking at the increase in equity here. Turnaround time on these increase in equity of $85,000. It's about a $57,250 upfront investment. That's going to be for the portion of the down payment and construction cost. And then a BRRRR is when a perfect BRRRR is when all of the capital then is returned to the investors, and then we rent it over the long term. You build wealth that way. So you put the property into rented, you take the money out and you repeat it. That's a BRRRR strategy. Flip is most people are quite familiar with the flip. And the flip strategy here on a smaller property, much smaller, is looking at, for example, your $55,000 purchase price property with a $48,000 rental budget. What should make why is the rental so much more expensive? Well, when you're flipping a property, we're looking at actually taking it with much nicer finishes to list and sell to somebody else, whether it's another investor or it's an end user. But the finishes are nicer, so the renovation costs are more than just a BRRRR where we're preparing it to rent it. Yeah, so ARV here, it's a similar ARV, $180,000. But when we're going to be taking this one and we're going to be selling it in a flip, the increase in equity is there. And by the time you actually go through your costs for the renovation, the down payment, and then the holding costs, things to that effect, you got a $60,000 profit on this one particular property. That would be about a 6-week turnaround for this. Okay. Not quite sure if the chat is enabled yet. Still there. I'll ask Alex into the maybe in the Q&A section. You guys have any questions? Go ahead and fire them on there as we go. So this is going to be a little bit of a larger example. This is a 4-unit flip. There's lots of different property sizes, but the same principles there. You've got a purchase price $170,000 with a rental budget of $60,000. ARV on this $380,000. So you're stepping up a little bit with your total invested dollars, but again on the other side, you've got a substantial profit by comparison. So total invested $80,000, closing and carrying costs are about $10,000. You're going to increase the equity in this property by about $210,000, and your total profit at the end is going to be about $110,000 here. The funds borrowed down there, you'll notice those percentages. Now, going down into America as newer investors, it's important to recognize that establishing relationships with lenders is very important. So we're going to cover all that in our next webinar in detail, and I'll talk a little bit about it later. But getting higher loan to values or LTVs, this is a representation of 60% borrowed on the purchase price. You have examples of 80% here in your primary residence. You may have an 80% mortgage, and you may have to put 20% down. You can get to that level as well, but usually anywhere between 60 and 75% LTV is where you're going to be in America. But they also lend on the construction up to 95%. But again, as we're investors, start around 10%, and then we work our way up there. There's also, of course, the option to purchase and renovate with cash, which saves time. It's a lot quicker. You also save on carrying costs, of course, for interest. And for some people, depending on the liquidity they're sitting on, they may be able to actually purchase cash, and we're able to turn things around quicker. And of course, your profits are higher. Okay. So some other examples. We're working right now on some large multifamily deals and portfolios here. This is going to be something that's a little bit bigger. This is 22 units. We've looked at them, up into closer to 100 units. An example, now this is going to get a little bit higher level for folks who haven't been kind of familiar with multi-family building investing. So I'm not going to get crazy into detail. We will do that in a future webinar, and we'll also plan to have calls and separate discussions with folks if you want to. But to give you an example on what some of these numbers look like here for a 22-unit building, and I'll focus on things that you can recognize, like price per door. So this is $1,050,000. The price per door is $47,000. Okay, so
sorry, Nate, can you compare that to a project?
Yeah. But by comparison, looking at what some of the prices are here, you've got. I actually pulled up some today, some multifamily properties today that are available in anywhere from Hamilton, Simcoe, St. Catharines, in different areas. You've got just as an example, a 10-unit property that's in Simcoe is $1.8 million for 10 units. So just as a comparison there, you're looking obviously 90-day for cost price per door. On this particular property, we're looking at coming in and again, we're going to look at stabilizing and turn the property over. All the highlights are down below on the right-hand side. ARV on this property after doing so is about $1.7 million, just under that, with projected gross rents of $226,000. So, I mean, occupancy in Ohio is great. We're very close to 100% almost everywhere. All the properties that we're looking at will be 95 to 90 occupancy. And the only reason it's not 100 is because some of those units are being turned over, and that's why. DCR, for those of you who aren't familiar, this is a metric that tells us it's a debt coverage ratio. It's telling us it's basically the property, does it have the ability to carry its own debt? And you can see here that it very comfortably does. You want to have about a minimum 1.2 when you're dealing with lenders down in the States. So these ones very comfortably carry their own debt. Again, the information down below is you can screenshot it if you want to, detail on the properties themselves. I'm not going to get into all the information about that, but you get an idea of what we're looking at doing with some of these multifamily properties that we're starting to make offers on and looking to come in and purchase. Here's another one here. Again, I won't get into all the details, but this was a bit bigger. This one's a 42-unit property with a 4.4% cap rate, right on asking right now. That's where it is now before it's stabilized. This is a price per door here is a little bit higher, $67,000. And the occupancy here is 52%. So what that means is that a property that has 52% occupancy, we can come in there and we can turn a lot of units over right away. So we can lift that value up quickly, and we're able to increase the value for our investors right away. You know, and this is being a 2.26% DCR at 5 years when the property is stabilized. Got a great unit breakdown. Another example of a larger property. And then finally, I think this is the last example slide. This is a turnkey. Some people's appetite in investing is they're a little bit more risk averse, or they just started and they don't really want to take on the idea of renovations and all these sorts of things, especially you know, in a remote atmosphere. That's why we set up boots on the ground. But in this case, what a turnkey property means is that you're buying it the way that it is. It's ready to rent right away. You buy it. Sometimes there are actually tenants already in it. So here's an example of a live deal as well. It's a turnkey buy and hold. And this particular property it would go for about $90,000. And yeah,
like especially
absolutely. Yeah, and if you have capital that you know, you're not looking to like pull it right away. You've got capital that you kind of want to invest, want to sit in a hard asset, which we're big fans of, especially with the dollar and things to that effect. This is a great strategy for that. You can get in there, you can buy a property like this, sit on it. Cash flow. Cash flow is huge in Cleveland. That's why we're there. Everything's cash flowing. This would be a duplex, so there's 2 units in it. You're coming in, you're buying it. Renovation budget is just very small stuff. There's a little bit of cleanup that needs to be done on the exterior entry, some paint. So your total upfront invested here, they converted this one. You put $29,000 US. It's about $38,000 Canadian. That's everything all in. Your rents are about $1,700. DCR on this is 2.4%. The cap rate is 13% if you're familiar with cap rates. So you're going to be buying this property, increasing with the value over time, and you're going to be cash flowing on it instantly. So some people much smaller, less appetite and are less risk averse. Perfect property for that. So strategy here, of course, would be to buy and hold. And if you do that, the more doors you have, it says here on the bottom. In America, you want to build rapport with lenders. So if you can have a few properties, you can flip 1 or 2, and you can do a few burns, you show the lenders that you have experience in that particular market, you get much better rates, and you develop great relationships with them over time. To the point where we have partners down there that are getting 110% LTV, so they're getting the entire property and the construction funded for a lot of these properties, which is incredible. So a common question we have from people, this is kind of a generic investor question. What kind of investor am I? Am I a capital investor? Am I an equity investor? What does it mean? And a lot of people on the call I can see here are very familiar with these terms. I'm not going to spend a ton of time on them, but just kind of explain who you might be. A capital investor, somebody who might say, I prefer to invest my money and then receive a fixed return, right? So I'm going to give you 100 grand, for example, for 12% over 12 months. And when we're done, you're going to give me my money back in my interest, and then I'm out. Like, I just want to be an investor. Just as if you're buying a stock, you're cashing out. That's the way, you're buying a fixed a fixed investment vehicle like a GIC. That's kind of what a capital investor is doing with the property. Whereas equity investors are people who want a piece of the pie. They're saying, you know what, I prefer to own a part of the property. I'm going to invest in this deal and I'm going to build equity as the property appreciates. And you're also going to receive cash flow. So, you know, these investors are wanting to build wealth in the property, not just getting fixed returns. That's kind of the difference between those two terms if you hear them kind of, you know, interchanged over time. Both investors often reinvest from our experience once the maturity comes. Some often capital investors invest in the property, and then when we return the capital and interest, they say, okay, great, when's the next one? Or they say, you know what, next time I want to be an equity partner, I kind of want to jump in. And quite often equity partners, when we borrow property, do the same thing. They want to keep going. So that all depends on one's appetite and what your particular goals are, right? So, so if you want to learn more on how to get started investing in the USA, you know, we're going to continue to have these webinars. We're going to provide more and more and more information to you over time as we go, and a little bit more high level as we get into some of the details. How you can invest is going to be, again, this is depending on what your appetite is. There's option one, which means a private lender. Again, we talked about a moment ago, capital investors. That's what that is, being a private lender. Joint venture partnerships is something where you know, you're able to join hands and be an equity investor. You can use real estate investing to be able to buy real estate for cash flow and building wealth. And the residential side option too. So kind of 1 to 4 units, duplexes, triplexes, fourplexes, single family homes, that sort of stuff. And then there's the option to invest in, you know, apartment buildings. Be a capital or equity investor in large multifamily deals where you're going to get, again, if you're a capital investor, you're investing your money into the deal, you know you're going to be getting your return. And then if you want to own a piece of the pie, there's opportunity to be an equity investor. And there's our ego, our American ego. Mm-hmm. All right, so here's the thing. We talk all the time about this, taking action, right? And again, this is, we talked earlier, and I said it as a joke kind of in our emails. This is not intended to be a sales pitch for anybody. It's intended to teach you about Cleveland, about the market, about investing, taking action on your own with Hummingbird Capital Properties, with other investors, whatever it is. We encourage you, working out, exercise, nutrition, take action, you know, like we're huge proponents of that. Action changes things. Right? Plain and simple. In this regard, when it comes to anything to do with investing, whether it be with us locally or in Cleveland, here's the information. Set up a call, questions you might have. Send us an email to set up a call, right? We can discuss your goals and how you can get started. Or if you've already started, how you can kind of move on and move the needle and get going. We love it. We're here. Email address is there. Go ahead and book a call on our link, on our calendar link. It's in our bio. And then make sure you're on our email list because deals will be going out. Yeah, if you're on the email list, you'll be getting investment opportunities. They're going to be coming out. We're building up a big pool of investment opportunities down in Cleveland, continuing to do them here as well. So make sure you're on our email list so you can get those. Before we have question time, just to let you know, on our next webinar, what to expect. A lot of people who have already kind of dove a little bit into investing have higher level questions. I get that. So we are going to be talking that we're going to make sure that we bring on guests, maybe 2 that are, you know, cross-border lawyers, accountants that can get high level with you. I can explain to you on a call very specifically on things like the entities and structures that are required, how we're able to safely and securely invest in the U.S. and take advantage of incentives without being penalized cross-border taxes. Very important. Remember, it's just a line. The border is just a line. It should not be a mental barrier for people to think, I can't invest there. It's very, very, very easy to do. The answers, we have them. It's simple. It's a matter of just setting up the structure properly, just like here, whether you're going to set up investment as an individual or in a corporation. Same thing down there. Just the way we set up the entity. So we're going to explain all those things to you. Everything to do with cross-border information. It's going to pertain to your strategy and long-term plan. The answers to those questions depend on what you want to get as a real estate investor, right? So, and then of course, you know, how our team, what we're doing to make things easy, we're putting together the power team to be able to allow investors to very easily basically jump in and invest. So we'll be doing that. We'll be doing live deals, and of course, we'll be having guests on. So Q&A. Now, any questions? It looks like here from Alex's comment that for some reason the chat seems to be. Yeah, let's see what we can do here.
I want to see you all.
Yeah, let's just do this here. Yeah, we're going to see what we can do here for y'all. See if we can get this opened up. Okay. Yeah, we're going to stop the share. There we go. We got our, there we go. Okay, so listen, any questions that you have, see if the chat is actually active and working.
Oh,
Yes, indeed. Does anybody know, without using Google, but you may need to, where the largest salt mine in the world is? The second largest is in Cleveland. The largest salt mine in the world. Does anybody know where it is? And if, or just if somebody can put something in the chat just to see, there we go. Okay, all right. Questions are coming in now. Okay, I think I had it.
Ah, there you go.
Yeah, there he is. Let's see if we can get Mark, my man. If you're not following Mark Getaco on Instagram, you have to be following Mark. Mark is an extraordinary wealth of knowledge and very entertaining. Let's just, we can do this. All right, my man, let's get you on here, Mark. Mark, you there, buddy?
Let's see.
Hey.
Yeah, there he is. What's up, Mark? How are you, my man?
I'm good. Let me see if I can get my screen on. I'm not gonna lie, my kids are spraying me in the background.
That's okay. We're all parents here.
Where is my video?
Should be at the bottom. Godridge, Ontario.
Oh, we have a winner, Brandon.
Yeah.
My man, Godridge, Ontario is the largest salt mine on earth. Way to go, man. I knew you Googled that. Don't you? Jay, we got your email. We got you, buddy, my man. We're going to get you on there for sure. We got some questions. Mark, go
Jay,
ahead.
you're going to love Cleveland.
Yes, Mark.
Give me a second. Give me a second.
It's okay. You know what?
Okay, just talk.
Don't worry about it, man. Go ahead. We got you. Everyone's going to go on and they're going to follow you. They're going to see you with that taco hat on, my friend.
Oh,
yeah, you muted yourself if you're on there.
Ask to unmute.
No, you're muted, Mark.
I'm unmuted. Okay, there you go. Yeah, man. You guys did a good presentation. Got me excited about Ohio. I mean, I think I've been bugging you about it for the last little bit too, man.
Yeah.
Exciting stuff you're doing, man.
Thank you. Appreciate that very much. Grateful. Thank you so much. Listen, Mark, you're gonna we are in need of, we never have enough exceptional contractors and experienced guys who know how to do design, contracting, engineering. You're my guy. So we're going down there together. We're gonna head down there and have a look at what you can do for us down there and turn over properties, Mark.
Yeah, I'm definitely excited to come out with you for sure. We're gonna make some fun content, which is what I'm more excited about, I think.
That will do it for sure, yeah. You think I'm that fun content? Tania is gonna take over the fun content. When do you see that? Then we're talking. Nice. Awesome, Mark. Thanks for tapping in, buddy. We appreciate it very much.
No problem, man. I'll keep supporting you, dude. Keep it
up. You
Thanks,
got it, brother. Likewise. Okay, some questions here we have in the chat as well. So, how is the appreciation in the past 1 or 2 decades in Cleveland as the prices are still relatively low? Great question. So, appreciation in these markets, in all of the American markets, but in Cleveland in particular, you're not going to see the same appreciation and volatility that you're seeing in, for example, Ontario and our market here. You are going to get very consistent higher rents relative to purchase price, and you are going to get appreciation. It's not going to be as substantial as it has been here in this market, and that there's a lot of different market metrics. But the goal here is going to be usually these properties, we have an exit strategy that's going to be, depending on the size of the property, 3, 5, 7 years. So we sit down, look at what your goals are, and then we go ahead and look at how we can scale you up and make the most money that we can. Thanks, Ankit. Appreciate that question. Absolutely. We had a couple of email questions as well that came in, and some of them were, let's see, lending questions. Questions on how can I, as a Canadian, borrow down south? Like, am I able to just go and get a mortgage, or how does that work? Well, as I mentioned in the slides, building a rapport is essential. You can indeed borrow in America, yes. One thing we've been doing is building that rapport with lenders. They have, like we have in Canada, you've got your kind of A lenders, which are like, banks, and you're going to get they have the least appetite for risk, and they're going to give you the best rates. And then you've got some other lenders beyond that, B lenders and C lenders. So in America, depending on the strategy that we're using, when we're buying large multifamily buildings, quite often we can actually take over rates on a property. But if we're going to be buying smaller things, duplexes, triplexes, if the strategy is going to be a flip or it's going to be a quick turnover, often we'll either use cash or private money, and the interest rate is going to be higher there. However, it's okay because we're going to build that into our, you can see here, thanks, honey, you're operating the chat for me. We're going to build that into our calculation and deal analysis and make sure that we're still taking advantage of high returns.
Okay, next question is interest rate. Does it work the same way here? Where can you lock in?
Great question, Julie. Interest rates, yes, it does. You can most certainly lock in. There's variable and fixed, just like there are in Canada. And again, if we sit there, we analyze what the strategy is for that particular investor in property, what we think we're going to do with it. Just like here, if we know that we're going to refinance, or if we know that we're going to try to turn the property over in a certain period of time, then we're not going to, lock in where there's going to be penalties. Another interesting point, though, in America is that they do have completely different lending when it comes to terms and timeframes. In America, you can actually borrow and lock in for 30 years. You can actually lock in your interest rate for that long. It's interesting there. So, there are options for you to obviously get out of that, but it's a completely different lending environment. The options are all over and all across the map. So we've got tons of things to take advantage of depending on what you want to do as an investor. Yeah, I think so. Yeah, absolutely. And we are going to we'll just wrap up by just saying, again, if there's any questions, just put them in the chat real quickly and we'll answer them. Otherwise, just so you know, again, we appreciate this. We want a kind of a soft intro to Cleveland as a market and letting you know kind of what you're going to start seeing from us as we start to move forward. We're going to continue to put out our deals here in Southern Ontario. We're very active. We have a whole team of course, set up here so that we're going to continue to take down deals here with partners. But you're going to see a lot of content when it comes down to Ohio. We're putting it out there strong. We'll have a webinar. We're going away at the end of the month, but we're going to be preparing our next webinar in a few weeks. That'll be a little more high level. We'll send out the opportunity for you to ask questions on that as well. And as I mentioned, if you want to book a call, go ahead, please book one, set it up. Any questions you might have at all about investing in general, Alan, Lele, whatever. Honey, the boss, anything else you want to say?
I'm good.
Yeah, listen, love you. Awesome, everybody. Thank you so much for tuning in. We'll see y'all soon. Take care. Have a great night. Hummingbird Capital Properties out.